Good morning, everyone. Good to see you all today. Welcome to the room. It is Thursday, April 28th, 2022, the morning session. And we've gotten ourselves an early failed new high and a pullback. RTY leading right now to the downside with a bearish outside day. As you can see right here, here's the early test at the previous high, and here are the defenses off that high, and then we just dropped. And this happened so quickly here that I happened to be right on the highest prices here for that SPY, and so I put it in, and it just left me behind. And then I went over to IWM for RTY and did the same thing, and those just barely left me. When I put in my order here, it was bouncing between 290 and 293 as it was testing the zone. So I said, let me get 290, and then it went 89 and then just started dropping, never filled. So that's a good move. Good move right out of the gate. Exactly what we were looking for yesterday, just based off of, again, the overall trend of the market. The fact that we've been... Actually, sorry, it was not this one that I was looking to get into. It was this one here. It was on this edge right here, QQQ, where I was trying to get in. I did not look at SPY this time around, but SPY dropped pretty nicely away from the previous high. You also see the previous week's close price here, previous week's close price there, previous week's close price here. So previous week's close and low, in addition to yesterday's high, all created a force field of resistance, and we've since rolled down off of that zone. When you look at the 60-minute time frames, right here, again, you take it the previous close and low offered here, it comes back, and a rejection developing there. Failed new high here, and we've rotated back down off that chart. Over here again, failure at the previous highs, retest there, failed new high here was developing, which we called out, and then a little bit of a drop. Failed new high here with a rejection at the previous week's close and low and drop. And then over here you can just see previous week's value, or sorry, weekly VWAP going offered and dropping. Bearish outside day right now for IWM and RTY, and those right now leading to the downside. RTY leading right now to the downside as these have pulled off the high. So again, just from the morning, and this is what we talked about before, sometimes you're going to get some of these moves here that begin prior to the RTH open. You had the initial burst up, and then a couple of hours into the RTH session here, this one, that's the 3 o'clock hour, that created the climax, and we've turned down ever since. Good stuff right there. The purple lines, the purple lines, that is the overnight pivot. The overnight pivot range. The overnight pivot is similar to, it was first introduced to me by crude oil traders that use crude oil. It was mostly the European algo pivot is how I was introduced to it. Basically, it is the open price at 3 a.m. Central, 4 a.m. Eastern, which is an hour into, usually an hour into the London Open. So it's that 3 o'clock open price is the actual pivot. What I do here is I create kind of an opening 4-minute range, and that's the overnight pivot range. And it can become a really good level right there on any given time. I mean, if you're up here and you're trading up here at the overnight pivot, again, taking it offered, drop you away from it. If there's a rejection, there tends to be a snapback to that point. So it's one of those levels that can be used by itself or in tandem with some of these others. But yeah, that's the overnight pivot range, and a great move down away from that level. So good failed new highs, and we haven't even jumped into the daily time frames yet. So if you come over here to the daily, let's bring up the ES for a moment. One of the things here that we've talked about is when you get into a directional trend, and we've had multiple directional trends this year. This is just year to date, right? This is year to date, and we've had the trend down, a trend up, a trend down, a trend up, and a trend down. And these have been very, very mature trends, multiple week trends. You know, usually 1 month of price action, 3 weeks, 4 weeks in those directions. But when you're trending down, one of the things that we look for is the failed new highs. When you're trending up, we're looking for failed new lows. And on this right side over here, this has been very, very good about providing failed new highs. So the idea, again, if you're newer to the room, you know, if we're trending down here and price takes out resistance, that's an opportunity to look for a bull trap, because we have turned down off resistance and we could be headed back down to the bottom of the range. So that's why that day right there we mentioned could be a significant day. Additionally, leading into that, we had a compression of the price range, which we quantified down here and mentioned there could be about X amount of points of movement. And you've seen that move come out over the last 4 days, or the prior 4 days there. Right now we're holding. But look at this failed new high again and a downtrend. Now again, this is where sometimes I'll mention here that the first failed new high, obviously this was the rejection above resistance. This was the first failed new high, and that's a good one, right? You're dropping. This is the next failed new high. That's a good one. You're dropping. There was another one here. There's another one here. And that one led all the way down. Now we are at support, though. So now that we've dropped and dropped and dropped and we're on support, you know, at some point you would have to think that these may fail. You're not just going to get a buy the dip or sell the rip forever. At some point you're going to change directions. So this might be one of the last ones of this move. Because again, if we drop here and say we reject, we might start turning back up off of this support. If there is a breach of market structure, then look out below, and things could get very, very bearish very quickly. You know, again, this market is what it is right now because of the overhead, you know, the headline risk we have across the board for so many different things. All in of themselves, by themselves, can be significant, whether it's the war in Ukraine and it's perhaps spreading across boundaries, and then or inflation, or the Fed fighting inflation and easing back. All these various things are leading to where we are now, and we are at or near the lows of the year. We have seen this very clean market structure here, very clean market structure. Are we about to see the next market structure move down, which will take place here and trade in this zone? And that's where RTY really leads a little bit, because RTY, it began the whole thing with market structure failures and breakdowns. And it's been the one the entire time with the best market structure. And that chart that Dwayne put up there, very, very good. You know, you see this market structure here basically. This is where it topped out and we started saying, up here. And then there's your failed new high right there that let us think that we might be able to take out that 2366, and it did, and it dropped. So again, failed new highs, beautiful. Here we're on this edge now. This is the failure of a transition phase. This is where we said, man, this could be good if it can hold, but oof, if it fails, we're right back to where we started, and now maybe we're giving it up. Now, you know, this was support, this was support, this was support, this was support. That was a failure, and now we're hitting hard into support. Do we now drop that next leg down and trade in here? Right there. That's probably what's left to trade. You know, if you're being honest, you probably need to go back down there. And that's what we mentioned from the get. So for those of you that have been around a while here, that 2100 level was the level there where we said if it fails there, you know, it could theoretically drop all the way back to 1750, and now we're retrading through that thin portion of the profile right here. And this entire profile was this thin until we started trading here this year, and now you've built it out. But what hasn't been built out is down here and that's where we're currently at the moment, looking to perhaps transition downward. So that market structure move right here to that 1750 could be significant. The LVN is right there. That's a nice little LVN right there, and it's right around 1750. 1710, long form FOMC key level down there. That one hasn't been reached in a very long time. When it took that one bid, it never came back to it really. These are long. I mean, I should probably take all these key levels off from down here. But look at this no, that one's September. This is a September 26th one right here at 1710, and that is from several years ago. Right here. And at first it signaled the top end of the range as it developed here and sold off away from it. Big sell-off. That was the painful Q4 of 2018. And then we bounced back to that level, and this was the painful move of 2020, the pandemic move. So both levels came off that 926 FOMC, and then we came back to it again. This is where it broke higher. Boom. And again, this breakout here coincided late with the vaccine announcement and rallied it. And now maybe we're coming all the way back to 1710 down here to meet that level again. So again, these FOMC key levels are impressive the way they play out. That 926 is important. I can, again, there's a whole bunch of them down here, and I don't have to keep all these. As a matter of fact, I haven't even looked at them because we haven't been down there in a while. So I'm going to start taking some of these off just real quickly here. Let's take a few of these off way down here. And we'll get more. This one is a July 29th. I'll keep that one on. That one's more recent. Everything down here I'll take off. And I will go about right. Let's zoom in right here. These are all earlier ones. So a bunch of these, just going to take them off for right now and kind of open up the chart a little bit. I did keep a couple down there, obviously the 1710 one. So when we look down here and we say, okay, how far can we go? This is the easy target right there, 1750, right there as the next downside target. Maybe there's some overflow and maybe we bounce back to 1900, and now we come in here and we do this for a little bit. So that is what could be there if we're going to make this transition downward. Man, I would say this is big. This is a big move, and we could easily see that transition. It's not always that easy, though. I feel like there could be a trap here. You know, we're still in this D shape, so we are in the premium pricing of the D shape that could snap it back up to 2000. Even back up to 2150, and now we're in that expanding, you know, cone type of thing. So I'm going to keep an eye on RTY here. Obviously, the objective for today has mostly been played out, which is watch for a rejection at the high and look for a pullback to the midpoint and the previous low. And so far, this one already did it. That's why I took my orders off. For the most part, this one's already played out, and here we are. We are starting to see a little bit of a bounce on the lows. And if you look at the 60-minute time frames, you can see where the potential is here for strength. The potential is there for strength. Look at this right here. higher low, higher channeling highs, and right now a little bit of a failed new low below the previous hour's low. Same thing here, same thing there. Channeling behavior up. Over here, still channeling higher. Failed new low right here. And then RTY is the most bearish. Looking nothing like the others at the moment. So you could see where the potential is for maybe a bounce back up and we kind of stay in the 2-day range instead of outright falling here for some of these. But it's been impressive how the ES and the NQ have somehow managed to stay above their previous session's midpoints to this far, while Russell is just smashing through support. So again, I missed out on Russell and QQQ here, but we may see further downside price action ahead if the midpoints are taken out. So far the low of the day is the previous session's midpoint in the ES. This is the low of the day, and that is your previous session's midpoint right there, 13,066. So those two important levels, those levels give way. There could be more downside ahead. Oh, thank you very much for the awesome thoughts there, Ribera. Also, great job on the trades early on. Yeah, I'm always grateful being in here with all of you all. Again, we're all here trying to do the same thing, helping each other out, and keeping it cordial. Yeah, a lot of fun in here. You know, I forgot to mention, today's the NFL draft, by the way, for those of you who have teams that you're rooting for. That's going to be a lot of fun tonight. The other night, I don't know if you were watching some NBA, by the way, but man, I was watching, was it Memphis and Minnesota? Wow. That was a game right there for a while, and you watch Memphis just claw back the entire way. Wow, wow, wow. If you didn't see that dunk by Ja, that Ja Morant dunk made me scream. Unlike anything I've done in a very long while. I mean, it's probably been 20 years since I screamed on a dunk like that, and it scared my wife. My kids ran down from upstairs and were like, "What was that about?" I'm like, "Did you see this kid's dunk?" I mean, that kid is fun to watch. He's only 22 years old. Was his third year in the league, and that guy, man, he's fire. He's a little bulldog. It's fun to watch. He's like a water bug out there with the ball, but man, he can fly. That guy just ripped back and dunked it over this kid. That was one of the baddest dunks I've ever seen. That was incredible. Anyways, that was awesome. Tonight's the draft. We'll see how that goes for the Houston Texans. I had disowned the Houston Texans because of the DeAndre Hopkins trade, but now I'm going to give a clean slate and see what we do starting here tonight. We'll see how that goes. D-Hop's a buddy of mine, so is Reed, Justin Reed, buddy of mine, no longer playing for the Texans, so they keep shipping out all of my buddies here. We'll see what happens. We'll get some new ones. A little bit of a rotation back down. So again, if we take out these midpoints here, it opens up the lower half of the range for ES, NQ, and YM. Right now, RTY clearly leading to the downside here and not giving it up. So RTY still leading, outside day down, new lows right now, and we are challenging the midpoints here in the ES and the NQ, which could open the door to much more weakness ahead. Ah, chess. You know, It's been a while since I've watched chess, but I do like to play it. Uh, I learned a long while back when I was, I don't know, 10 or 12 years old, and that was a lot of fun to play and test wits with older players and older folks and just learn. And that was a lot of fun. I have several books here as well from my chess playing days. I got a whole book on just opening strategies. uh, it's a lot of fun. A lot of fun. And that could be said just of trading. A whole book can be written on just opening strategies. Today was one of those. Overnight strength, reject the previous high, and we're dropping. Looking at, by the way, I do have a chessboard here that I just got back from my mother. She held it for me for a long while. We got it from Mexico. One of those Aztec and Spaniards type ones where you have Aztecs on one side and Spaniards on the other as the chess pieces. And then you have, they're made out of ox bone and other materials. Anyways, a really unique set. And I believe the, yeah, on the face, I believe is the sunstone. The Aztec sunstone, which is pretty cool. I need to pull it out and take a picture. It's pretty awesome. So we just pulled it out because we want to introduce it to the kiddos. So still showing some downtrending price action here. Failed new high to begin the day, and downtrending price action, very clear. Whenever, say for example, you don't have a trade right now and you're looking to get in on a rotation, whenever you're trending in one direction and you feel confident about that trend, these tiny blue signals right there are awesome signals for short-term rotations in many cases. Obviously this one's one big drop here, one big drop. But usually again on the pullbacks it can be an opportunity to look to begin to initiate a short for a drop. Right now this thing's dropping off this recent signal. But really it's this midpoint right now that's going to open the door here. We're right at it in both cases. And a stop run day calculation here Dwayne mentions is 1833.60. 1833.60. For those of you wondering what a stop run day calculation is, it's basically when you take the current high of the day and you take the previous session's low and you take that range and then you project that range lower, and that gives you a stop run calculation, and it's when the midpoint of the day basically is at or around the low of the session. And so basically it's that right there where you take that high, you take that low, and then you project that amount downward to get a rough target of this, and it actually worked out perfectly, right? Sometimes over here, there it is again, you take that high, you take it down to the low, you take that range, and then you project it downward, and that's your stop run target. Not always perfect, but it's incredible on those days where the transition happens, how often it can get that. You know, here's a midpoint from that day, here's a midpoint from this day, so they're all at or below the prior day, so half the range is down. Those are days there. You can see over here a little bit of a pullback early the next day, and then that's your target calculation up. So the one he did right now, again, from that high to this low, puts you at 1833.60, which would be huge. That would be huge. That's still 30 points from where we are. And if you add 30 points to the day's range of 50, it puts you at 80 points for the day. And if you look at 80 points here and bring it this way, there's been a couple of days that have traded 80 points. This day here and that day there were both 80 points. This one's already at 50. Maybe another 30 down wouldn't be that big a deal. You know, it's already done it a couple times in the last week alone. But that would be a pretty big day. And to Dwayne's point here, if you do see a stop run day down, is that a transition day? That would certainly, say we hit that one, the 1830 here and close right there. I mean, it would be hard not to see that as a transition. It's hard not to see it as a transition phase. So this is big. Quite a bit of weakness here at the edge. And again, this was different. You see that? You see that? You see all these buys, buys, buys. It tried here and just got crushed. That looks like it's a market structure move down in the making. Big time selling pressure right now. And ES, NQ, and YM all below their previous session's lows now, which opens up the potential for an outside day down. So here it is. So usually it's kind of first things first. So would that apply to the NQ, the stop run day calculation? It applies to any day where you're going to see some sort of expansion. And right now, at this part of the day, you're probably not thinking expansion yet. You're just thinking, can we break through the mid? Obviously, you get a failed new high, you're looking for a midpoint. If you fail at the midpoint, you're looking for the outside day. That's usually the flow. Now, if you're going to full out take out the low and start expanding, then the stop run day is in play. As of right now, it's probably too early, obviously, for the ES or for the NQ, for any of these that are still up. It might be too early to think a stop run day could be in play for these, although it could pick up. Right now, I would think at least an outside day, and that's your biggest deal. And remember, just to get outside day would be a huge high range day. To make a stop run day, you then have to double that range. So it's not super easy. You get that failure there, and that's just half the day's move. Now you have to make another half. So it would be huge for this thing to come down here and then get a stop run through that prior day. You can certainly do the calculation, but first things first, you reject here, you go to the mid, you fail at the mid, you drop to the low. So somewhere in here, 800 could be a high quality target here for the NQ. They all look a little different right now. That would be something right there if that were to play out. But you're right. There could be a stop run day in both directions. Say it held here and started to rally. That could do it. You're exactly right. And that's what down here, when you get down to this portion of the range and you're at support, again, you're only going to get that one true breakdown, and the rest are going to be fade, 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 fade. As we saw over here, you're only going to get one true breakout, and if it doesn't happen there, you're going to fade. You only get one true breakdown here. If it doesn't happen, you're likely going to fade. But first, it can make things painful down here, as it did over here. And on this day, we were starting to sniff it out. You know what? If it wanted to break, it would have already done it by now. And that's where we said, if tomorrow's a failed new low, it could be good. Not only for the day, but for the week. And it ended up being awesome for 2 weeks or so. We're in the same boat down here. If we don't transition down and we mess around early in May here, it could be a May bounce back. At least short term, right? 14K here, 15K there, 13K here. That's your zones. So are we going to stay in here, or are we just going to full on drop 1, 2, 3 distributions down, or what? So, again, this is incredible. The weakness we've seen this month, it has been relentless. You don't see many months like this, but we've seen 2 this year already. You saw January, hard down. February was a checkmark trend month down, but these were hard sell-offs from the beginning of the month to the end. And notice how both of them began the month. So this is for the knowledge base, the personal knowledge base later, but both of these started with an up move first and then a failed new high and drop. This one started the year with an up move, failed new high, and drop. Again, just very clear weakness here so far to begin the year. That's huge. Are we going to follow up another high range month down with another high range month down, or do we actually bounce next month? Let's take a look here at the time frames. I was going to add a monthly here. Let's go monthly there. And we'll go back max. So here's a monthly chart. As we go back again, you know, when you're in the up move, and let me change this back to a log here. Boom. When you're in an up move, what we continue to say is, you know, the weakness is bought, weakness is bought, weakness is bought, weakness is bought. And at some point, you're going to get the failure. You're going to get but we just hadn't seen that. Again, since 09, in the NQ, we haven't seen a market structure breakdown that's been super significant. It's tried. There were a couple of times in here where I thought this was finally it right here. Beautiful long form rounded top, and it just never broke, and then it became a rectangle, and it was a 2-year sideways period that opened up another range. Another 2-year sideways period, and then up. You know, again, when you look at it from a long form, after major weakness like we've seen to begin the year, 4 months of weakness, 5, 6 if you add November, December, that right there could be enough to get this thing going back up, and maybe you stay. So I'm still kind of, for some reason, still long-term bullish. But you know, again, right here, this was .com bubble busting, and look at the major move. This over here was the beginning of the financial crisis and a big drop. Are we about to do the same for once in a while? You know, World War III perhaps getting underway, or maybe not. Who knows? The 40-year inflations and Fed not as accommodative. Again, that could perhaps finally lead to some pullback. I mean, again, I'm just trying to keep the long form idea here that this thing still remains very bullish. And so on this weakness, it's still usually a good idea to add or build for the longer push down the road. So again, still holding off on adding or buying anything at the moment. This thing's been getting very weak still, but we might be at a point here. I know it sounds crazy, but we might be at a point where it starts to turn around. Maybe the previous year's low does it. Because remember, we just don't hit a previous year's low very often. In this one chart of the NQ, you hit it one time right there. And that was the year where I thought, man, this is it. We're finally going to break. And it didn't. It was the opposite. It looks very similar now. It still does. Now, in terms of what's the difference for the log, when you go very far back, by going log scale, it helps to bring back the actual proportions of the moves that happened back then. You know, to look at the NQ and drop during that .com bubble, this was a huge move. I mean, it basically went from 5,000 back to like 800, right? That was a massive move. But if I don't do log scale over the long form, if I go like this, you really don't get the magnitude of some of these moves. So to do so, I mean, obviously this is the same, you know, big amount of points, but percentage-wise, it's not there. So to go log, it kind of gives you the magnitude of what happened before. But yeah, right now, this market still teetering on the edge. You got this kind of lower lows, you know, does it swing back? Does it swing back, or is this it? I don't know. I'm still watching for signs that we find that strong low at some point and start to punctuate a low for the period of time. We just haven't gotten there. So failed new high today. Downtrending move to begin the day. It happened pretty quick. Great job for those of you able to get in on those on that move. Right now, the QQQ spread that I missed out on a little bit earlier is up a little bit here, not tremendous, 240. I was trying to get in at the 290, so yeah, 50 cents on that right now. On that move down. You also have IWM. When I had that one up, it was about 295, and right now that's at 186. So that's over 100 bucks per contract in the money right there on that drop. That one's the most significant decliner so far of the day. Now, I haven't mentioned crude oil. Let's look at crude real quick. Crude oil has done nothing, and it just woke up here a few minutes back with a huge move. I'm not sure what that was. Was that almost looked like an inventories move, although yesterday was the inventories. That big push right there, but it had been stuck, and you see right here previous week's close, previous sessions close. Crude oil has been stuck. It really hasn't wanted to go much of anywhere this week. It's been kind of pitiful. If you look at the previous week's close here, I mean, this is Tuesday, this is Wednesday, and now this is Thursday, and that's all it has done is trade around the previous week's close. Right now, again, we're getting a little bit of a bump to the upside. So that's interesting, but looking at the broader chart here, again, daily time frame against not only the previous week's close, but now the previous month's close, it has been dead sideways. Come on. There you go. So that's the previous month's close. Chop, chop, chop. We're seeing a little bit of a rise right now out of that range. So again, a little bit of a 4-minute pop to the upside. And now it's trying to break out. So this could be interesting. Maybe it's done here and we move back to the upper end of the range here, 110s. Here's 108 to 110. Down here you got 96 to 94-ish. And we're trading right in the center of that range right now. So if we are moving away, we likely go somewhere between 108 and 110 here up ahead. So this is interesting. It's waking up a little bit right now. This thing has been dead in the water, going mostly sideways for much of the week, and right now starting to trigger a little bit of strength here. So I wonder if there's some headline that has come out regarding crude of some nature. Okay. So it's still trying. 104s right now. A little bit of a push higher out of this range. Again, if you're trying to look for something with a bit of strength here, crude oil starting to make a move right now. The rest, are we at a short-term, bottom right now with the YM? Are we at a short-term bottom? Look at the 428 FOMC key level. So far, that's been bid this week. We're getting close there. Here's your FOMC key level we called out yesterday. Getting close there. Maybe some of these are slowing down just a hair here. Here's VTI. Here's the Vanguard Total Stock Market ETF, the one that JP has mentioned to us all year. Keeping us on top of this one, which has been good. It almost looks like the S&P, right? I mean, you're right at the support lows. You have the very clear resistance. You have that smaller market structure here. And we're sitting right at this support zone after this tremendous move. We had that one breakout day and a trap in reverse, failed new highs and drop. The edge has been very clear here. Do we get another rejection here early next month and make our way back to the middle of the range, 220? Or do we continue to drop here? Again, we haven't really gotten through this area of support so far this year, but S3 is sitting down below. That could be in play. This thing has clearly not been able to stay above the previous year's midpoint. Does that open up the potential for lower prices into the low, or at least kind of a midpoint between the mid and the low? So here's the mid, here's the low. Maybe somewhere in the midpoint between those two could be in play. So still very weak, but we are at the opposite end of the range, and so again, I'm usually looking for the fade, but I'll be patient about it and just let it prove it. That's the thing about changing a trend from one direction to the other. It's got to prove it with some strong reaction. This was strong last time, and many of these were strong last time on these lows. We'll see if we get another one here soon. Apple's up on the day, up 2+%. And above yesterday's high. Earnings looks like it's coming out here at the end of the day. So that one's bucking the trend of the market at the moment. But when you look here again, it's not at the edge. The edge is more here. Are we still in this downtrend? Obviously, earnings will influence this. Another one that came out with earnings, wasn't it Facebook or Meta? Gapped up 11% on earnings from yesterday. The bounce comes off of S3. That's yearly S3 right there with a buy signal. Gaps up off of it already. The last time it hit S3 with a buy signal, it bounced, took it out, and then rallied. 234.5, big time resistance. Almost an island reversal here with how that played out. But interesting, again, Facebook hasn't been able to find the bid. Continues to sell off. But that level right there is a doji right at the third standard deviation of yearly value, and it's precisely at the yearly S50. Yearly S50 big time level, yearly S25 both big time levels. So half the year's range, last year's range right here. Filling that gap right now. Alright, well, still down here. No fade in this trend right now unless a significant rejection occurs. Again, with 7 minutes, 6.5 minutes to go until the end of the hour. The 60-minute charts keep forming little tails and then keep falling. Little tail and then falling. So it's still quite a bit of weakness here, hour over hour. And likely expecting new lows next hour still until this thing can find a strong low. Twitter had earnings as well. Not a whole lot of movement on the earnings. They made 90 cents versus an estimate of losing 18, 19 cents. But no real price action here. Again, once the Elon news came out that day, it's been kind of hold off for me. Although we had it as a buy candidate at the end of last month based off the turnaround it's had. Man, what a move so far that's been. Trading 48s right now. Yeah, that's a good question. Why is it not trading the offer price of 54.20? I think once the deal becomes finalized and the ink is dry, that's probably where price goes to that point. For now, I guess anything could still happen and maybe the deal falls through. I'm not sure. I think if the deal falls through now, Elon has agreed to pay like a $1 billion payment penalty or some sort. So obviously I don't think it'll fall through, but I think that's the deal. Once it's done and done, I think you'll see this thing gap or push to 54.20 and then just do this. You know, just goes kind of flat. So here's our FANG idea. This was the FANG from the other day. Diamondback Energy. Extreme reversal down. Or sorry, an impulse sell-off down with the potential to snap back to the midpoint. And I mentioned a pullback could provide an entry point for a move up. It could take 1 to 5 days. If not, if we do this, then it could be a 1 to 2 week type of move. This is still hanging in there with a shot to see that 133. 132.90 basically, but yeah, that level could still be in play as a bounce candidate. Some of these other ones failed pretty good. Caterpillar, for example, down 5% right now with earnings crushing price. So again, it was trying and it failed the next day, so I held off. Then this looked pretty good, but earnings coming up, and now you can see the gap down and drop. So this thing has just been crushed since that new high. The last 6 days, huge to the downside. You'll also see DE down as well. This was another one That looked like it could be due for a nice little short-term bounce given the impulse sell-off, and it's been hanging at or around the midpoint of that day. So not a lot of good stuff there either. Just trying to get these things going to the upside hasn't been the easiest in some of these industry groups. CVX, another oil-related stock, on the pullback. Again, you would think very quickly there's a shot to bounce back and get that midpoint, 163. And so far, the entries have held, 155s have held, but we just hadn't gotten going. That can be really, really good moving forward, because sometimes what I say is if you get a great rejection and you get 2-3 days sideways, day 4 could be the day where it really moves. But in this case, day 4 comes with earnings, so it's much like the others. If earnings ain't great, and this is tomorrow before the market opens, we could be gapping up and running, gap down and running. We'll see where it goes tomorrow out of this range. But 163 could be in play based off the impulse move. Again, earnings coming up tomorrow. That'll push price one way or another. CB is another one we looked at here. Chubb. This one did get that midpoint, but it didn't do it in a way that was at all good. Strong low here, and the idea was holding here could get this thing bouncing to that 210 level, and the next day was a hard close and a hard gap up on earnings. So while it hit it, it wasn't very actionable. So some of these are still hanging in there. FedEx still hanging around these lows. Crude oil trying to extend this move through 104s. And just coming off the lows is RTY right now, as we head into the next hour of trading. In about 15 seconds. The 60-minute charts look like this. A little bit of a tail at the lower end of the days or the hours range. CL finishing the hour strong with a breakout through 103. Can it hold 103 moving forward? We may see a little bit of expansion out of crude oil. Again, very narrow price action for crude, but still averaging 4 points per day. And right now we're basically at 4 points for the day, 405. Oh yeah, that's the S25, the weekly, you're right. Right on top of it. Right there as well. This one is it right here. So that's your S25, that's your previous low, and that's been the trading range for 2.5 days here in the YM. So each of those hanging in there off that 25, early key level there. So a good move here out of RTY and IWM leading lower. The rest kind of following suit as well, but the previous session's midpoints, man, they're hanging in there in the ES and the NQ. Not bad at all. The YM previous session's close and the pivot range are all basically the same number right there, which makes it a little bit more difficult. Just kind of one line to chop around. This is the midpoint here, that's the midpoint there. Trying to pop above it right now and keep prices above that upper half of that range. So good movement, nice failed new high this morning, a nice rotation back into the range. Again, that's exactly what we're looking for. Good job for those of you that executed those trades. You know, when you miss out on a move like that, it's just, again, that's opportunity cost. I missed out on this morning on that easy decline. Several hours of directional conviction so far. but we're still inside the trading ranges now. So the easy trade is over. Great job for those of you that got a part of that. There could still be more weakness ahead today, but that depends on the previous session's midpoint in the ES and the NQ. If we can't break through that zone, then we might just stay in the range. You got a flat weekly VWAP here, a flat weekly VWAP there. It would surprise me if we bounce back to it and kind of chop around now. So we'll see how this plays out here early this hour. Again, keep an eye on RTY. That's the one that's been leading. If it doesn't see new lows below 1860 here, there may be a little bit of a bounce back as well in this one. All right, well, I'm going to go ahead and call it a morning on the mic. Thank you very much for joining me here today. Great to see our ideas from yesterday kind of play out. Not the biggest day. We thought today could be a bigger day. I mean, RTY is at 110% of average, but not quite the 125s we were looking for just yet. ES trading 76% of ADR. I think we were looking for at least 80 points yesterday. If I'm not, I need to look back again. But decent range, decent range. We'll see what they bring heading into the rest of the day. Again, thank you very much for joining me here today. We'll be back at it on the mic later on this afternoon, and working on these DMs, getting back to you all as well. So thanks for those. All right, everyone, take care, and I'll see you in the room.